Stocks inched higher today, and we've got Jonathan Cheng joining us on the set now to tell us all about this. Greece again.
That's it, Greece again.
So what's happened? What's happened now that investors are not unhappy about?
Well, the finance ministers in Europe are supposed to meet Thursday evening, but before they do that, they need Greece and their politicians to come to some sort of an agreement about what cuts they're going to make. And it's the same story that we've been talking about for weeks, for months. And all of that happened again in microcosm today. So I think we're still waiting for final word that there's some sort of an agreement, but for the time being, enough for us to get, a couple of...
Okay, well, our parent company, as this news just in, our parent company News Corp reported Q2 earnings of 49 cents a share, beating estimates 39 cents a share, beating by 5 cents a share. So obviously we'll see the stock there in a moment. That's our parent company, News Corp, 39 cents a share, beating by 5. Do continue, Jonathan.
Right.
Oops.
For all of its importance, not as important as Greece. So
that's right, not as important as Greece.
As we come to an end game here, the market seems to have kind of hit a paralysis moment, probably in a positive bias standpoint.
Right. Now keep in mind, we've been up for 7 weeks now. This has been a great rally. People have been enjoying this, although you've got a lot of investors who've been looking for an entry point, looking for a little bit of a dip, but the Dow hasn't had a triple-digit loss yet this year. We're halfway through February. That's quite a while without any opportunity there. And so you see some people perhaps either deciding we need to get on this bandwagon before it's too late, or some people are just going to be...
So I read a report today, as we get a lot of economics reports through here at the Wall Street Journal, but this was from Capital Economics, and they were saying the US is only minorly exposed to Europe. Suspend belief for a moment. This is what they were saying, not what I'm saying. And that even if Europe does go into a deep recession, which is what I think they will, it will only shave half a percentage point off US economic growth this year. That sounds to me like utter nonsense, but that's just my view.
Well, I'd agree with you. It seems that, if anything, the linchpin between US and Europe are the banks, the financial system.
And what the ECB did back in December, the LTRO, the long-term refinancing operation, that really did a lot, at least in investors' eyes, to take some of the heat off of that. And it's interesting, Simon, that you raised the Capital Economics report, because
you read it too.
I read it too. I've been reading all the reports, and they've actually been probably among the most bearish on the street, or they're not really on the street, they're based in London, but interesting that they should say that, because they've been questioning this rally the whole time. They've not been right so far, but...
I mean, I read that. Maybe I read it wrong, but that's what I read, and I was incredulous, because it's the biggest trading block in the world, and if it goes into a deep recession, how can that possibly, how can we be immune from that? We are not isolationist. Okay, this just in as well. We've had the News Corp earnings, 39 cents a share, beat estimates by 5 cents, that's Q2. And we got Cisco Q2 earnings, 47 cents a share, beating estimates by 4 cents. So, and there's the chart. Obviously, people liking that. That's the aftermarket trading there.
And don't forget the other important earnings news, Simon. Groupon down 15%, trading at $21 per share there. First time
in the aftermarket, 15% down.
First time it's reported earnings, and they are not good.
So group off. Groupon is group off right now, off down there, and maybe that's probably because they have a business model without a moat. I think that's what we say. There's no real way to stop competition in that business, right? We've talked about that on Digits.
That is true, but as they've been trying to do, build up as big a consumer base as possible.
Yeah, to that point though, to that big consumer base, how good are people who are doing everything they possibly can for a discount and have no brand loyalty? And they're basically like, oh yeah, I'll do that because I'm getting a discount. Right. Is that a good group of consumers?
Perhaps it has its faults, but right now, people still assign a huge market value to Groupon. The number of people they have involved
interacting with minutes ago, though.
Interacting with their service is still large, but you raised the relevant question: is it a enduring business model?
And what do you think? Enduring business model? Are you a Groupon person?
I'm not a groupie, if that's what you're saying. But I mean, all I can say is that in this sort of environment, with the economic outlook uncertain, I think retailers of any sort will be happy to get any sort of traffic. Now, again, you raise good points, but better than nothing.
Okay, so to recap there, if you missed that, Groupon reporting some earnings and the stock down well over 10% there. Cisco Q2 earnings out 47 cents a share, beat by 4 cents, and News Corp, our parent company, 39 cents a share, beat by 5. What are we looking at for the rest of the week? Is it more Greece, more drama in the streets, more austerity talk?
Not a lot of economic headlines coming up this week, but of course, as you mentioned, we do have Greece again. The finance ministers meeting Thursday evening. So again, between now and then, there could be any number of headlines that could get us from left field. We don't know what they might be, but I think that's what we're looking at.
But we will be here.
We will be here
to catch those headlines when they come out of left field and grab them and bring them to here at WSJ Live.